Continue our discussion on Facebook now. Joining John Aiken from ITG Research is David Kirkpatrick. He is the author of the book, The Facebook Effect, the inside story of the company that is connecting the world. Kirkpatrick visited the company at least 30 times and interviewed CEO Mark Zuckerberg when researching for the book. So safe to say he knows the company and the people there well. So welcome to the show. John and I were just talking about the number of things that you can do with Facebook. I've noticed that you can't really search. I still use Google for search, and you can't really buy stuff. I still have to go to Amazon to buy stuff, or wherever I find it cheapest. When is Facebook going to be everything that I need on the internet?
I don't really know that that's the aspiration, to be honest. I think, as he was pointing out, there are plenty of ways that Facebook can help you do certain things to the degree that a social lens is helpful in doing those things. Facebook brings a social experience to whatever part of the internet you're interacting with, and that can probably be extremely valuable in a variety of realms. They're never going to be Amazon. They're not going to sell you stuff, but Amazon might use Facebook to help you find things even faster that you might be interested in, and Facebook might find a way to get some revenue out of that. Although, ironically, a lot of the ways that that's happened up to now, Facebook hasn't gotten a lot of revenue out of. So, in fact, I honestly have to say, just on balance on this whole question of the $50 billion valuation, and maybe to slightly disagree with you, even though I wouldn't have spent 2 years writing a book about it if I didn't think this was a really important company that had a lot of upside. $50 billion is a very, very big number for a company that has no transparency in its finances and probably will have at most $2 billion in revenue this year and almost zero bottom line profit.
Well, but this is the point. I think John was making this point as well. $50 billion maybe now is too much, but after they go public, it's too little.
Well, you're presuming they will go public.
I am making that presumption. I'm not making that presumption. I'm saying if and when. I said if / when.
Look at what they did today, and look at the deal that Shares Post in a much smaller way did just a couple of weeks ago. These vehicles, the $1.5 billion vehicle that Goldman is going to create, we don't know how much of those shares are going to come directly from Facebook as newly issued shares, as opposed to shares being sold by existing holders. But
can that happen, by the way? How is that not public?
Think
if everybody trades the shares, especially rich people through Goldman Sachs,
that may be as close to public as it's going to get, is what I'm trying to say. Because if you think about what that accomplishes, it accomplishes the two main reasons that companies go public: for liquidity, for their employees, and to get cash. If they can both get cash and give their employees liquidity, the pressure for an IPO is gone. So it may be that you could see Goldman in two ways here. You could say, well, they're positioning themselves to be in the role of underwriting the IPO. Or maybe you could see them as the facilitator of the non-IPO.
John, I got to get you back in here. Are they going to go public? Is it wrong to presume that they're going to go public?
No, I think they will go public. I think the reason that they want to do this in the way they're doing it now is because they want to take some big risk with evolving the business model. So think about all the flack that they got for changing some of the privacy settings a few months ago. That would have been much harder as a publicly traded company to do. There's some other risks that they want to do as a private company, so you don't have to think about managing quarterly expectations. It's going to be hard for them to be, a $200 billion company where an employee owning 0.1% is worth $200 million. They're not going to be able to get the liquidity they want unless they're a public company, and they will be $150, $200 billion valuation one day.
They have to be, right? I mean, Google's worth almost $200 billion. Why not Facebook?
Well, at the rate they're going, they'll be a $100 billion company by the middle of next year. I mean, the valuation has gone from, maybe the mid-20s to 50 in 2010. Let's just look. That's pretty fast. The reason I am so dubious about this IPO thing is knowing Zuckerberg as well as I do.
I was going to ask you, Mark Zuckerberg, you've met him. Does he really not want to do it?
He really does not want to do it. He may, at some point, resign himself to the inevitability. But does he want to do it? He does not want to do it.
Why not? Is it because he's such a private person, even though the social network was such a public movie?
For a lot of reasons, like for the reasons that most CEOs who really like control would not like to have public shareholders and Wall Street breathing down their neck. You talk a lot about short-term mind frame, I hope. The fact is that's what Wall Street is all about. That is not what he's about. He's about a very long-term view. The one thing I like to say is he looks at Facebook at about 600 million, which is at now, And he doesn't find that impressive. He looks at a planet of 7 billion people, and that's what his aspiration is. And that's where you could say maybe a $200 billion company might be justified someday. But in his mind, he won't get there if he has some short-term people breathing down his neck telling him not to do the long-term stuff that he wants to do.
If they get 7 billion members on Facebook, by the way, I think it should be worth more than $200 billion.
Probably 300.
Yes. What do you think? When do you think they'll go public? I mean, you're saying he may have to resign himself to that. The SEC, Mary Shapiro, could kind of help him resign himself to that fact, right?
Yeah, I really do think it's an early 2012 event. I think that if revenues grow in the way in which we think they'll do, they'll be doing something like $5 billion to $6 billion in run rate revenue at the end of next year. For them to do that next level of investment in the infrastructure, which they're going to need to do if they are going to become sort of the operating system on your device, no matter what device it is, a PC, a handheld, etc., they're going to have to do some hardware investments, just like Google did with fiber and such.
If they get $5 billion a year to spend, maybe they could develop an iPad app.
So you think they'll have $6 billion by the end of 2012 in revenue? Is that what you're saying?
Run rate. So annualize the Q4.
By the end of 2 years from now.
That's right.
Well, that might be possible.
That's right.
That's quite possible.
Yeah.
And will they need to invest that much? Can they burn through that much cash doing what Zuckerberg wants to do?
I think they can run the business at break even if they want to. They're just not going to be able to grow it as fast as they want to. This is all about how quickly do I want to grow my business.
It's a lot of variables, though, that you have to realize are in play. This is such a new business with so many new elements that have never been seen before. For example, almost all of Facebook's growth is on mobile. That means they're dependent on Android and iPhone. If either one of those platforms were to in some way restrict what they can do, that's a big material problem.
All right. I'm sure it's all in your book. So check out David Kirkpatrick's book. John Aiken, thank you so much for joining us. We had